If you're self-employed in Canada and you miss one of these tax steps, it could cost you thousands. Or trigger a CRA review. Let me be clear. This is the simple truth. When you work for yourself, you are the boss, the employee, the bookkeeper. The Canada Revenue Agency, the CRA, knows this. They watch certain items on your tax return very, very closely. They are looking for mistakes. They are looking for discrepancies. If they find them, you will be the one paying the price, literally. This is not a maybe. This is a will. This is not meant to scare you. It is meant to prepare you. Knowledge is power. When it comes to your money, you must be powerful. This is for independent consultants, driven real estate agents, hardworking rideshare drivers, and innovative online sellers. You are the most vulnerable when tax time arrives. This is your pre-filing checklist. It is a survival guide. It will help you find and fix the most common and costly problems before you hit that submit button. So before you file your taxes, stop, breathe, and read every word that follows. The business use of home deduction is the first place a CRA agent will look. I guarantee it. So you need to get this right now. The very first step is to calculate your workspace percentage with precision. Find the square footage of the space you use for your business, then divide by your home's total finished living area. The result is your business use percentage. This single number dictates how much of your home's expenses you can claim. Do not guess. Do not estimate. Measure it. Write it down. Exclusive use space, a room used for nothing else, is the gold standard. It is clean. It is simple. It is easy to defend. A shared use space, like a family room corner or dining table, is more complicated. The CRA is highly suspicious of these claims. You must prove it is your principal place of business and used regularly and continuously for meeting clients. The burden of proof is on you. Eligible expenses, heat, electricity, internet, property taxes, rent, mortgage interest, home insurance, minor maintenance. But only the business portion. If your workspace percentage is 10%, you claim 10%. Do not get greedy. Claiming 100% of internet or your entire mortgage payment is a massive red flag that screams, "Audit me." If your business use of home creates a loss, you cannot use that loss to reduce other income. Under CRA guidelines, you can carry the unused portion forward to a future profitable year. Keep every bill, every receipt, and a floor plan showing how you calculated your percentage. Be prepared to defend your claim. Overstating this deduction is one of the most common reasons self-employed individuals get flagged. For many of you, especially real estate agents and rideshare drivers, your car is your office. For the CRA, it's a high-risk audit area. Track business versus personal kilometers meticulously. This is not optional. The CRA demands contemporaneous records. You cannot just guess at year-end. Log trips as they happen. Non-negotiable. Solution: a mileage log, notebook in your glove box, or a dedicated app. For every business trip, record the date, your starting point, your destination, total kilometers driven, and the purpose of the trip. Platforms provide trip summaries, but they are not a substitute for proper logs. If you're guessing your business percentage, you're already in trouble. Eligible expenses: fuel, insurance, repairs and maintenance, license and registration, car washes. If you lease, a portion of lease payments, CRA limits apply. If you own, CCA, depreciation. Claiming 100% without a perfect logbook? Financial suicide. If audited and you have no detailed log, the CRA can deny your entire vehicle expense claim. Gross negligence penalties can apply. Estimating your mileage is a gamble, and the house always wins. Start your logbook today. Not tomorrow. Today. Business versus personal columnar. Contemporaneous entries. Receipts organized. Vehicle percent calculated. Done. Section 4. The installment trap. Avoiding the surprise tax bill. Many self-employed people finish their return and see a massive 5-figure tax bill because no one withheld tax all year. When you are an employee, your employer withholds. When you're self-employed, you are the employer. You must pay your income tax in installments. This is not a suggestion. For many of you, it is a requirement. CRA requires installments if your net tax owing exceeds $3,000 in the current year and one of the 2 previous years. They'll send reminders. Ignoring notices leads to painful surprises. Missing payments is not free. The CRA charges installment interest that can add up to hundreds or thousands. Be proactive. Estimate installments based on last year's tax or on this year's projected income. The CRA My Account portal has a calculator. Safest method: every time you get paid, transfer 25-30% of gross income into a separate savings account. This is your tax account. Do not touch it. On each due date, the money is waiting. Pay online through your bank or CRA My Payment. No stress, no panic, no surprise bill. The worst call in September? You owe installment interest. Take control and make sure that call never happens. Quarterly dates noted. Calculator used. Tax account funded. Payments made on time. Protected. Section 5. The GST/HST threshold. A ticking clock for small business growth. Goods and services tax. Harmonized sales tax. Here is the rule you must burn into your memory. If your worldwide taxable revenues exceed $30,000 in any 4 consecutive calendar quarters, any rolling 12 months, you are no longer a small supplier. You must register for, collect, and remit GST or HST. This is not a choice. It is the law. The danger is not watching revenue closely. A few great months can push you over the line. If CRA discovers it later, they can force you to pay all GST, HST you should have collected from the date you were required to register. Translation: you pay it out of your own pocket. You cannot go back to old customers for the tax. Once registered, you must charge the correct GST/HST on all taxable sales in Canada. That money is not yours. You hold it in trust for the government. File returns annually, quarterly, or monthly, and remit the net tax to the CRA. Good news: you can claim input tax credits on business expenses to reduce what you remit. If you sell on Shopify, Amazon, Etsy, be extra vigilant. Revenue totals count toward the threshold, not profit. Track sales monthly. Maintain a rolling 12-month total. When you're close to $30,000, act. Register in advance so you're prepared. Section 6. A final pre-filing checklist. Your financial self-defense. We have covered a lot of ground, I get it, but being overwhelmed is not an excuse for being unprepared. Let's boil this down to a simple, final checklist. Your last line of defense before you send your financial life story to the CRA. Home office. Have you measured your workspace and calculated your exact business use percentage? Do you have all utility bills, rent receipts, or mortgage statements to back it up? If it's a shared space, have you documented why it qualifies? Be able to hand documentation over without hesitation. Confidence comes from preparation. Vehicle. Is your mileage log complete and up to date for the entire year? Does it clearly distinguish business from personal kilometers? Do you have start and end of year odometer readings? Have you collected gas, insurance, and repair receipts? A shoebox of crumpled receipts is not a system. Your records should tell a clear, honest story of business use. Installments. Review last year's tax and this year's income. Were installments required, and did you pay on time? If not, expect interest added automatically. If income jumped, start setting money aside now. Open a separate tax account and make it automatic. GST, HST. Verify your position relative to the $30,000 registration threshold. Track total sales monthly. If you're approaching the line, register in advance. Completing these 4 checks lowers your risk of triggering a review, facing penalties, and paying more tax than necessary. This is how you keep more of what you earn. This is how you take back control. If you're a consultant, a real estate agent, a rideshare driver, or an online seller who wants to stay ahead of the CRA, do two things right now. First, subscribe to this channel. Clear, no-nonsense financial advice to help you thrive. Second, download the free Self-Employed Tax Survival Checklist. It expands on everything we covered and gets your books in order before you file. Click the link in the description below to get it now. Free. Use it. Share it. And check the pinned comment for a link to book a consultation if you have specific questions. If you're self-employed and want to keep more of what you earn, subscribe now and download the free checklist below before filing.